Turbo Trading with head trader Robert Knight, MBA.
This is a short video on the SIVB debacle and what I'd call a Black Swan event. I mean, a Black Swan event is highly unexpected and generally a rare occurrence that impacts the financial markets. In simple terms, what happened with SIVB was that they took their deposits from their clients, from their customers, and because they had so much of it, they put it into longer term treasuries. But what they hadn't expected was the Fed's raising interest rates, so their bond position became underwater, it was at a loss. Now, if they were able to hold the position through till maturity, there'd be no loss. But what happened was people got nervous and they started withdrawing their money, and the bank had to sell positions to cover their losses, and they ended up being about 1.2 billion short, and it just escalated, and the Fed stepped in and took over the company. So the question is now then, what is the effect of that on the broader markets? Well, it's going to take some time for this to work out. But in my opinion, if you look at the SPX here, you've got this big reverse head and shoulders pattern. Here you've got the golden cross where you have the 50 EMA moving up through the 200, and the 200 is actually starting to turn up. If you look at this as a wave 1, 2, 3, and then a 3-wave corrective wave 4, if this bounces, this could be the start of the next leg up. Look at the volume here, 35 million, and this is capitulation type volume. You can see it back in here. You've got those same kind of volume days, big capitulation. And today, on that volume, it was down slightly, but off its lows. Now 3,800 is a key support level for it. And it bounced stronger up to 3,900 and it closed quite strong. We'll see tomorrow. Now we have CPI numbers tomorrow, so that'll also have a big effect. Now this is not going to go straight back up. This is going to take some time to work through this. There was a lot of stocks down because of this massive sell-off. But if we look at some of the other indices, look at the NDX here. NDX, it's actually not looking that bad. It closed back at its 200, maybe just slightly over it. This didn't get up as far up as the SPY and the Dow. But, this chart also didn't get hit as badly either. Now, these are your mega caps, so they have a lot more resilience to this type of financial condition, whereas the broader market, your IWM, just absolutely got hammered. I mean, these are companies that were depending on a company like SVB to finance their businesses, just even from payroll alone. So it got crushed. But again, look at the massive volume here. So, this is a huge sell-off. This could be capitulation. Look, it sold off, bounced back up. We'll see what tomorrow brings us again. Maybe if we get a bounce here, maybe a gap up, it would give you a strong island reversal. So, it's not the end of the free world as we know it. And one of the other things I want to look at is the technical indicators. We see that just 17% of stocks are above their 40-day moving average. And this got extremely overbought back in the end of January, and look at this big sell-off. But now it's extremely oversold, down at 17%. McClellan Oscillator also had a very bearish reading here, got down to negative 252. Now closed to negative 217. That's extremely oversold. We're bound to get a bounce in here. The market is at key support and extremely oversold. I wouldn't expect it to continue to sell off here. VIX did get also up to 30, which is extremely oversold, and closed at 26.5. Now this is bearish. Anything over 25 is still bearish, but between 20 and 25 is neutral. But the markets being where they are oversold, there's going to be some bounces in here. And and when you get this type of volatility, I mean, that's the thing about a Black Swan event, is because it's so unexpected and the drop is so sharp and so quick, you get a great opportunity to catch the rebound and make some trades. And we saw that opportunity here in some of the stocks we traded. FRC, this thing from 91 down to 1750, closed at 35. When we saw this starting to ramp up here, we started trading this stock. And it was tough to trade because if it halt, gap, halt, and go up. But it did, did trade back up to 43 from an entry in here around 23. A couple others, the PACW, same thing. We were involved in this around $6. Went to, close to 11, 10.86. No, a little, around $11. So there's some great opportunities to trade, and there will be tomorrow as well. Especially if the CPI print is neutral or softer. A hot CPI might not be good for markets, but if it's neutral or softer, which we're expecting, then the Fed's probably pause, and we'll see markets rebound from this level that it's at. Here you can see this is the SPY futures. Big reverse head and shoulders. We'll see. It does have key resistance here, 393.50. That's your 200-day moving average. But technically, this chart is still bullish. So we'll keep our fingers crossed. Solid strategy for investing, and see what the morning brings.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.